we're going to get this show on the road. Welcome all. It's nice to see you all. My name is Michael Metz. I'm one of the board members at Generator. And it's really my pleasure to MC a little bit tonight. I just wanted to make a couple of comments. I have been so impressed by the reaction to this series of speakers. I really want to thank a bunch of people. I have a formal list here, but I want to thank some of the folks really involved in putting the details together. That's Chris Thompson, who is the executive director of Generator. He's really done a good job. And John Anatucci, who is head of Launch VT, also part of the Chamber of Commerce. John has, I'll take just a sec, when we started thinking about this, I had a lot of ideas. I think Chris had some ideas. We're both fairly new in this issue of teaching about entrepreneurial education. John came forward. He had a bunch of great ideas. He's really created a platform that I think is reproducible. We do intend to repeat this. So I just wanted to thank these folks. I also want to introduce Michelle Bushwell. She's from, did I pronounce it right? Buswell, thank you. Michelle is from People's United, works in their wealth management area. I found an interesting detail about her that I'm going to share. She was a pastry chef in Silicon Valley, so has a very creative mind. And I just want to say that People's United came in as the core sponsor of this event. They've sponsored every single piece of the series. It was really their foundational support that let us decide to move forward and complete the fundraising and put this together. So I just want to thank you, Michelle, and thank People's United. And I'll hand this off to you.
Thanks, everyone. We're so excited to be here and to be a part of this great initiative. I've been really impressed what Generator has done, and about 3 months ago, I came to Generator through another program, and here I learned that you can take a profile of yourself, make a little teeny tiny version of it, shrink it down, and put it on a Lego body. And who says dreams don't come true? So I've been hooked ever since and very impressed with Generator. All joking aside, we at People's United Bank are thrilled to support initiatives like this one. Today's topic, which is how will you fund it, is near and dear to our hearts. I know there will be a lot of great information here tonight in the presentation. And thank you so much for being here. And more importantly, thank you for Generator and for all that you do for the community. We're so happy and thrilled to be able to support something like this. Thanks so much. Oh, you're back? Okay.
Thank you, man. So, in addition to People's United, and I'm going to go fast, but it's important, these people have made this event possible. I wanted to thank the other folks we've engaged in sponsoring this really important program. Start with Davis & Hodgkin Associates. This is an accounting firm. They have a board. They have one of their folks on our board, and they are supporting a bunch of our programs. This is one of them. Merritt & Merritt Lawyers. I see Ken Merritt in the back row. Thank you, Ken, very much. FreshTracks Capital. They've been wonderful enough to let us take one of their mentors, really knowledgeable folks to talk to you tonight. Middlebury College has pitched in to support this. M&E Designs, one of our graduates, they're really super in 3D prototyping. The Center for Women in Enterprise in Vermont, they've helped us with the curriculum. They really are helping us understand how to engage more women into this organization. BTV Ignite, a nonprofit organization engaged in supporting the growth of technology in the area. Green Mountain Power, and our media sponsors, RETN. They're recording this so you can see this at night. And I want to also thank you for coming again, and I want to remind you, Generator is a nonprofit. We live in part on philanthropic support. Our membership fees don't cover all, so if you feel excited about what we're doing and have the capacity, we'd love to see you get engaged and support us. Thanks. I'm going to pass you on to Cairn Cross. I think most everyone here knows Cairn and FreshTracks. Very much involved in the entrepreneurial community for 25 years here.
I've been here that long, yeah.
All right. So he's going to speak to us tonight about finding the money, and I'll pass you off to Cairn. Thank you very much.
So you've got this so I can walk around, and can everybody hear me? A check, good. So it's always my ambition to give talks and emulate Dean Martin and be able to drink while I'm giving talks. And people know that I'm generally unfiltered, and the more beer that I consume, the more unfiltered I get. So this will be a fun evening. So I'm here to try to make a dry topic, financing, a little bit fun, and I'm going to try to go quickly through a bunch of material here because I'm sure that some of you have questions, and I really enjoy Q&A, so I'd rather get to that part. And by then I'll need another beer. So if anybody's live tweeting this, I know Michael didn't talk about this, but I know he knows what Twitter is. But either of those two Twitter handles are mine. And John, are there like hashtags for the night? Like, this is an awesome presentation, but no. I mean, what is there a launch VT or a generator or a jumpstart or hash jump? At generator VT. Perfect. All right, good. Okay, so I know this program has used, and other speakers in the series have used the business model canvas as a way to talk about what they're going to talk about or a way to fit it in. And where do people think, oh, I didn't put the canvas up. All righty, there we go. So where do people think, those of you that know the business model canvas, where do you think financing should show up? Does anybody have a thought?
Key partners.
Yeah, well, it could be. This is key resources, and a lot of people say, and John's like, key resources, that's what you should talk about. So, hey, I want to talk about that, but guess what? I'm not going to talk about that because you can use a whole bunch of different ways to finance your business. You can finance your business through partnerships. You can finance your business really through different channels of sales. You can bootstrap your business via revenue streams and so forth. So we're going to want to make sure that we talk about some of those things. Almost everybody has probably seen a business life cycle curve. Sometimes people will put in a valley of death between startup and growth, right? They'll literally make a break, and you've got to kind of jump over it, whatever that means. Four stages of business growth: startup, growth, some sort of maturity, and generally a decline phase at some point unless you reinvent yourself and start the curve all over again. A long time ago, I listened to a speaker do this, and he outlined this curve, and then he said, those terms are kind of crappy. Here's the way I think about it: wonder, blunder, thunder, and plunder. And I thought, that's great. So that's stuck with me ever since, and it's the way that I kind of think about it. Like, oh, wow, this is so great. I'm in business. I wonder, and then, you blunder around and so forth. The reason for this curve is that every stage of business really can utilize different forms of financing. And so we tend to think about this as, well, either all due respect to People's United Bank, either I go to, I go to a bank and then I'm all set. I got everything I need. But the reality is you kind of go in and out of different types of financing via the life cycle of your business. So startups tend to use friends and family and founders and fools, so the 4 Fs. They use angel investors. What's the difference between an angel investor and a fool? Hey, Ken, you're like part of the angel group. Can you answer that question? What's the difference between an angel and a fool? Yeah, all right. I'm just making that up. There's actually no punchline, but here it is. The real answer to that is that an angel investor is like your friend or your family, but they're an arm's length removed. They're probably not somebody you know. They're somebody you need to get introduced to. High net worth individual that you get introduced to, that's an angel investor. There are seed capital funds. Sam's here from VSET. VSET has a seed capital fund, so that's one of the seed capital funds you can go to in New England. Incubator and accelerator programs can many times allow companies to get set up to find early stage startup capital. You can bootstrap yourself through early revenue or through things like Kickstarter. which are kind of interesting, or Indiegogo. You can crowdfund your equity through platforms like Milk Money. I know Louise is here from Milk Money, and she can talk to you about that afterwards. So all of those are ideas for a startup phase. If you get into the growth phase, if you make it through that valley of death, you might find that you can continue to use angel investors and super angel investors, ultra high net worth individuals that will continue to fund things like that. You can, is that me making that noise, or is that okay, great. Perfect, yeah. It's the farrier in the back getting ready to shoe the horse. So venture capital firms like FreshTracks and other firms around New England that actually provide venture capital financing. They're fiduciaries for other people's money, or we are fiduciaries, and we make a decision to invest in various businesses. There are venture debt companies that provide venture capital in the form of debt rather than equity. There are alternative debt sources in Vermont. Vermont Community Loan Fund, for instance, would be one, a flexible capital fund. You can bootstrap through the growth phase. You can only grow as fast as you can bootstrap, so it can get a little difficult. And you can sometimes begin to find some bank financing in that growth phase, particularly when your profits get to be somewhat predictable. And then when you get into that maturity phase, this is where you find either large private equity or venture capital funds that finance companies. Banks love this phase because it's very predictable, so bank debt works there. Some companies go public, take their company public through an initial public offering. There are mezzanine debt firms, so there's a bunch of sources. Everybody loves a mature business, a lot of sources of capital for a mature business. And then you would think that in a declining business, it would be hard to find capital, but there's actually plenty of capital sources. So turnaround and buyout firms that might buy a distressed company and turn them around, structured debt products at banks, asset-based financing that kind of ride that curve down in a very structured fashion. I'm going to put ESOPs in there. That's a subtle political statement. We won't go into why I'm putting that there, but the best time to sell the companies to your employees, because you can do this without, you don't call a meeting and ask your employees to sell it. You go find a lawyer that'll allow to be the trustee, and you sell it. You sell it at the top when it's going to decline. That's what you do, and then you say, I'm socially responsible. Oh, I'm getting to be political about this, aren't I? I'm socially responsible. I sold the company to my employees. This is great. Yeah, right. You're on the downhill slide. All right, so there are considerations. There are considerations that you should think about when you go to raise money, and we could do an entire day of considerations. There's hundreds and hundreds. I tried to pick out some things that were fun, and I actually tried to pick out things that I could go to the web and find interesting images for, so it would make this a little more interesting. So we're going to talk about lifetime capital needs. We're going to talk about high growth versus low growth scenarios, because you got to consider different capital for those. What are you going to use the capital for? That's important. Control and governance, and economic cycles. Those are the things we're going to talk about. Okay, lifetime capital needs. That's Vermont Teddy Bear building, Willy Wonka, chocolate factory. $10 million of initial public offering went into building that lovely building, and then they ran out of money. But before they did that, before that happened 30 years ago, there was a pushcart on Church Street. Some of you that have been around here for a long time might remember John Sortino started this company selling teddy bears from a pushcart on Church Street. I've actually never asked John whether when he was doing that, he thought about the lifetime capital needs. No, John, he might not have. I mean, he had probably this great vision. I know he had a great vision, that he was doing day by day. But at some point, if somebody had said, your company is going to consume tens of millions of dollars of capital over the next 35 years to grow to that level, he might have said, you're crazy, I'm pushing a thing, and do you want to buy a bear, right? I mean, that's what it would have been. It's important, though, to kind of think through those scenarios even when you're really small. What's the lifetime of your business going to look like? Do you want to be the one to operate it forever, for instance, and so forth? And all of those things factor into what's the actual lifetime capital need going to be, and where am I going to get that capital from? Start out well, build the foundation well, and things will follow along. Mess it up at the foundation, and you may not ever be able to get to that big building that you need. High growth versus low growth. I mean, it's really, really simple. The paragraph over there, the faster you grow, the more money you are going to need, paradoxically or ironically, in order to kind of keep up with that growth, particularly in businesses where you're making things. You need raw materials to make inventory, you need to sell and then collect the money, and all that stuff takes time. The faster that growth rate, the more of that you're going to need. So it's always inherently going to be easier, interesting enough, to finance probably a slower growth company than a faster growth company, because fast-growing companies have a lot more risk, and they're harder to predict in terms of how much money you need and when you're going to need it. What do you need the capital for? See, I love being able to just go to the web and grab images. This is really great. So different types of financing for different types of purposes. So if you're going to buy, not this pickup truck, but the new version of this pickup truck, because you've got to go out and deliver your goods, that pickup truck might have a useful life of 5 years or 6 years. So you're going to match that by finding capital that you're going to, probably a loan that you're going to borrow and pay off over the life of that pickup truck. You don't want to finance this pickup truck by selling 50% of your company, because that 50% of your company that you sold is going to be 50% you don't own 20 years from now, and that pickup truck will be long gone. So match those kinds of things. If you need people, if you've got to spin this up for people, you're going to need a more permanent form of capital. Vermont Teddy Bear is building, this is a commercial interruption, building cute little Easter bears that you can buy over the next couple of weeks. To do this, they need capital to do that. And to do that, they need to potentially either consume the cash that they have on hand or use their line of credit for a period of time to build the inventory up, sell them out over Easter, and repay the line of credit. So short-term capital for a short-term need. Since I did a retro truck, I found a retro vintage ad from the 1940s, I think. And so let's say your strategy was that you needed capital to go out and do some advertising. That might be, in some ways, a more permanent form of capital. You've got to build your brand up. You've got to create brand assets and collateral. You've got to go out and purchase ads. You're probably not going to pay that off immediately, and over time, you're going to need some time. By the way, we're all kind of like farm-to-plate people, know where our food comes. This is actually a canned freezing mix that you would use in the, mom or dad would, probably mom, because it was the 1940s, would use this to create homemade ice cream. Doesn't that look good? I mean, that's just like, that's terrific. Control and governance provisions. So here's the thing, when you borrow money or sell a piece of your company, you are on your way to losing control, and some of this is going to come with some sorts of governance provisions. So equity capital, if you sell a portion of your business, probably comes with the investors wanting to have some nice board of directors that helps control what you're doing. If you borrow money on a secured basis by pledging your assets and you're not able to make the payments, you might find yourself in court losing those assets through foreclosure or through seizure or something like that. If you take Uncle Harry or Aunt Ida's money, you have to face them at Thanksgiving. Right? All things have control and governance, and you have to think through what you're willing to deal with. And some people, that's like, yeah, I'll skip Thanksgiving dinner. Other people are like, oh, I want a board to help me out. It's different for different businesses and different folks. Is our people's banker still here? Oh, you might want to go to another room for this slide. So here's an example of macroeconomic cycles and what they can do to business capital, right? So this is 2005 to 2014. This is, by the way, in trillions of dollars. This is like $700 trillion, I think is what this means. And you see, right before the crash of 2008, you see small business, the volume of small business lending, primarily by banks, going up and peaking and then dropping down. And this is through 2014. And if you carried this out, you would see it rising, but you would not see it doing what it had done before. Imagine that you are a company in that growth phase, and you're finally getting to the point where you're bankable, and it is 2008. You are going to find it a little more difficult to find capital. So all of these kinds of things are considerations. Things are moving around in real time, and those are the types of things that business owners have to wrestle with. These are my basic rules of raising capital. So the number one rule is the golden rule. Does everybody know what the golden rule is? This has nothing to do with President Trump. Well, so that, that is right, but I'm going to frame it up differently. Anybody else want to take a stab at it? Okay, here it is. If you have the gold, you get to make the rules. And so inherently, in any transaction or any relationship that a business is trying to develop with a capital provider, they are always inherently at some disadvantage if they actually need the money, because the money provider will have certain rules and regulations that they will put around it. So it's important to always remember that that transaction is always slightly imbalanced. The second bullet point is the best time to raise capital, ironically, is when you don't need it. And that's because it takes time to raise capital. And you need to provide a lot of information to whoever's going to give you the capital or invest the capital or lend you the capital. And so if you need it tomorrow, so a great example is today's Thursday, and if somebody called me today and said, I'm having trouble making my Friday payroll, would you like to invest in my business? My answer is going to be always categorically no. Like under no circumstances do I want to do it, because I don't have the brain capacity to figure out whether that's a good risk in 24 hours, right? If we started a conversation today about whether we might finance the company a year from now, that's a decent time. So different types of lenders and investors will take some time period. For banks, it might take a month to 2 months to get a loan approved. For angel investors, it might take the same time period. It's generally a reasonable amount of time. So you're going to want to raise capital when you don't need it and with plenty of forethought. You always want to right-size your capital raise. So, before there I showed a pickup truck. If all you needed was the pickup truck, then all you want is to borrow the money for the pickup truck. You don't want to raise $1 million for that pickup truck, because you don't need $1 million for one pickup truck. So raise the right size of the capital that you need. Remember that any capital that you raise or any money that you borrow is the first step to you losing control of your business. Want to guarantee that you will never lose control of your business? One rule there would be don't ever borrow money or don't ever take investor money, because it will be a step down that path where you might lose control. If you borrow money, you're supposed to repay it. I know that sounds like I shouldn't even be mentioning it, but I was a banker for a number of years before I saw the light and reformed, and I'm a recovering banker now, although I still drink, because of the fact that I was a banker. And so she's still lurking over there, I don't know. But the point is, it's amazing how many people actually somehow or other don't think it has to be repaid. Oh, well, we'll roll that into another loan as we get bigger and blah, blah, blah. Someday the day of reckoning comes. If you borrow money, it is going to have to be repaid somehow. If you borrow from your family, you're going to have to face it the holidays. We talked about that. Here's the way I think about the difference between loans and equity. Loans are more transactional. Equity is always, always, always a relationship. And so if you're in Las Vegas and you're drinking a few too many, well, you're probably drinking cocktails and you're gambling a lot, and you meet the man or woman of your dreams, and you want to borrow a little bit of money from them, that's okay. If you want to run to the chapel that night, bad idea, right? Bad idea, don't do it. You know, it won't stay in Vegas, it will follow you home. That's what equity is like, right? It's a relationship over a period of time, and you want to have the same kind of relationship and do all the same kind of diligence that you would do for any long-term interpersonal relationship. I've talked about equity, I've talked about debt, but I haven't actually defined some of those things, so it might be a good idea to do that. Equity, you know, another way to think about it is stock. You're selling stock in your company or membership interests if it's an LLC. There is, for the investor buying that stock in a private company, there's limited liquidity, there's limited security. They're also in a long-term relationship, and they hope someday to get their money back and make some money, but it's going to take a while. The investor's taking quite a bit of risk in buying equity, but the founder's actually lowering their risk because now they have a partner alongside them who can put in capital, presumably if they can or aren't able to. Equity is very expensive. People are like, oh, I want to raise equity because there's not like an interest payment or I don't have to make payments, so it's cheap. Okay, so here's the thing. Imagine you sold 50% of your company today for $500,000. Just imagine that. So if you sold 50% of your company today for $500,000, what's the implied value of your company? For those of you, math was what? $1 million, right? Million bucks, right? So imagine that what you needed that capital for was a fleet of pickup trucks. And 7 years from now, you've got no more pickup trucks, but you still got 50% ownership. And imagine that you're now able to sell your company for $5 million. What's the investor get back? Half of that, $2.5 million. So for investing some money so you could buy some pickup trucks, which you can't use anymore, you have paid $2.5 million for the use of that $500,000. You would have been better off to borrow it at 15% interest or 20% interest, right? I mean, you'd be far better off to do that. Equity has no fixed repayment schedule. It's entitled to some economic interest, share of the profits, share of capital gains if you sell the business, share of the asset sale if you do that. Debt, things like term loans to buy that pickup truck or a line of credit to build those teddy bears. It's secured by real collateral to lower the lender's risk. So that means they have a lien on that pickup truck and they can come grab it back in the middle of the night if you don't make payments. It's usually guaranteed by the founders and larger owners. So some people say, wait a minute, I formed a corporation because my lawyer has told me that shifts the liability risk to the company from me. Pauline's laughing over here like, ha, that's what lawyers say, you're right. Because I'm a lawyer and I do. But but the thing is, when you get when you have to sign that personal guarantee with the bank, they pierce that corporate shield, and then basically that company can be worth nothing. You default on the loan, they will come after you personally, right? So debt has higher risk for the founder than one might think. It's a relatively inexpensive form of capital, even at higher rates of borrowing. It's way more expensive than equity. Traditional sources of capital, we ran through some of this already. You know, friends, family, fools, founders, venture capital firms, angel investors. Those are traditional sources. Traditional sources of debt might be banks and credit unions. And guess what? Angel investors and friends and family can also lend you money, just like a bank can. So you can get a loan from Uncle Harry and Aunt Ida. And in Vermont, we're blessed with a whole bunch of alternative sources of debt and equity. This is kind of cool. So one of the things, believe it or not, is business pitch and plan competition. So Launch VT, for instance, has, what's the prize this year if you win Launch VT? John?
First place, 30 grand, plus another 40 in-kind service.
Yeah, so implied value is $70,000. So the major wise guys aren't here. I think it's the first time I've actually done a talk and they haven't been here. So, but the reason I'm joking about that is that MajorWise essentially has financed itself through pitch competitions over the last year. They've won enough pitch competitions that that's been one of their primary sources of capital, which is terrific. That's great, non-dilutive capital. Angel investors are an alternative, and there are alternative ways to get to angel investors through platforms like Gust or Circle Up would be another one. The Angel Capital Association will give you a list of angel groups. A lot of angels are organizing into groups, and you can pitch that particular group. Don't like angels, you can bypass them altogether and go to Kickstarter or some other crowdfunding platform. You can crowdfund in a different way in Vermont through Milk Money and actually get the angel investors that way. You can bootstrap by deposits on the sales that you're making. Give me 50% down now, and I'll use that money to make the product and then collect the 50%, the extra 50% later. So there are ways to alternatively finance your business. Flexible Capital Fund has royalty finance programs for food, farm, and forest products. Lots of microloan programs. I was in Brattleboro yesterday, and the Brattleboro Development Credit Corporation was saying, hey, we've got this brand new microloan program. We'll do $2,000 loans and $5,000 loans. So Opportunities Credit Union up here, Community Capital of Vermont and Barrie, all of these folks have microloan programs, and they're eager to make small loans. Vermont Community Loan Fund, your local development authorities, great alternative sources of capital. Okay, so what do you need to do in order to raise capital to successfully pitch? This is what I think. There's no hard and fast rule here. I think that you need some sort of executive summary that's a narrative. It's probably a couple of pages that tells what you're doing and gives people the information they need. I'll talk about that specific information on the next slide. You need some kind of a polished pitch, which is generally delivered in person, but a lot of people are video filming their pitches and then sending that around also. So their executive summary is basically done in a verbal pitch format in that fashion. If you make things, you should have prototypes and examples of your products and things that possible lenders or investors can see and feel and touch. You need well thought through financial projections. I've got business plan with a question mark. And here's the thing, the answer to do you need a full business plan is kind of like it depends. It really depends on the lender or the investor and what they want. From my perspective, you don't necessarily need a full business plan for what we do at FreshTracks. Anybody ex-military in here? Anybody know, or if you're not ex-military, have you heard the saying that a battle plan doesn't survive first contact with the enemy? A business plan does not survive first contact with a customer. First customer, you're like, okay, I'm making all these things in orange, and the first customer comes in and goes, I don't want orange, I want green. And you go, oh my God, I never thought of green. So it's important maybe not to write a full business plan, especially in those early stages, but it is important to have well thought through financial projections. What are the elements of a good pitch? The first one seems pretty obvious, right? You should, you should say who you are in the organization, the contact information, and if you have information, it should, like a slide deck or things, you should have that information in there. I bet 80% of people who send me a slide deck don't include, I got their email because they've emailed it in, but they don't include a phone number, they don't include a website, they don't include anything else, and I'm like, where did this come from? Like, I don't even know where this business is located. I know nothing, right? A pitch, a verbal pitch should always start. I like the tell them what you're going to tell them, and then tell them what you told them. Way to do it, right? So you're starting off with an ask. A pitch is always, a presentation doesn't have an ask. A pitch has an ask. So I am here today to ask you for should be right up front. You should state a problem, and the problem should be stated in terms of pain that you are alleviating from a customer. Here's a problem. I figured out a way to solve that problem through this following solution, and now you get to describe the solution, and you always have to say why you're better. Why are you better than every other solution that's out there? Say that. You should get to the management team really quickly. Why are you the people who figured out the problem and have come up with the solution. Because almost all lenders or investors, despite what they say, put a lot of judgment on management team. It all comes down to that. For investors particularly, it always comes down to that. So why are you the ones? The biggest mistake with pitches, they put this all the way down at the end and it becomes the last slide and they're really rushed and all they have is a couple of headshots and they don't say anything like, here we are, this is great. And you're like, who are you and why did you figure this out? You got to talk about a business model and why you're going to make money and how you're going to make money out of your product. And then any underlying magic, your secret sauce, describe why you're different. And there ought to be some idea of how you're going to approach what's the product market fit and how you're going to approach customers. If you could do all of that stuff and do it in 7 to 10 minutes, that's great. You don't need any more than that. That would be sufficient. Okay, I'm going to give you some examples. I'm going to give you 3 examples. These are totally made-up examples. These are not actual businesses. You can actually, if you like any of these ideas, you can take them and make them into a business. I'm giving you the whole thing here. No royalty, no charge. Don't worry about it. Okay, I don't want a piece of the company. Oh, by the way, I'm not sure we'd invest in any of these either, but that's beside the point. So here's the assumptions. A startup company making Vermont ketchup. So I did a dry run of this pitch yesterday with some people, and I got 15 different ways they wanted me to spell ketchup. Because I had it spelled a different way. I think the correct way. They didn't like it. So there it is. They said, it's Vermont. It's going to be spelled like that. Okay. Startup company making Vermont ketchup. They tested the product last summer at a bunch of farmers markets. It sold well. Over the course of the winter, they've gone out and got some retail accounts, City Market, Healthy Living, blah, blah, blah. They're going to self-distribute. They're going to drive the product around and drop it off at the stores and stock the shelves. They think they need to find a co-packer because they can't make it on their kitchen table anymore, so they need to find somebody that will make this for them and begin that co-packing process. And they hope to also, besides the retail accounts, expand farmers markets. So those are the assumptions, right, for Company A, Vermont ketchup. Here's what they want. Here's what they think they need: $25,000. They think they need a used truck to make deliveries because they're going to self-distribute. They need to pay for 60 days worth of their product from a co-packer. So they've estimated what that's going to be. They need some collateral and marketing materials for the farmer's market. They need to hire part-time employees to work at the farmer's market. That's the $25,000. That's what they want. So what you want me to show in the next slide is what they should do and how they're going to get it. And what everybody wants is for me to give them one solution. Like, they should go to the Opportunities Credit Union and get a $25,000 loan because that'll solve the problem. That's great, and I would love to give you that advice, and I love the Opportunities Credit Union. But I can guarantee you that that's not the way it's going to work in real life. The way it's going to work in real life is going to look a little more like this. They're going to go to Uncle Harry and Aunt Haida and anybody they can find, and they're going to try to get 5 or 10 or whatever they can get. They're going to try for 25. Nobody's going to give it to them, so they'll piece some stuff together. They'll go to the credit union and they'll get a loan for just the $8,000 they need for this really crappy used pickup truck. They'll go to the co-packer and they'll say, please, I don't want to pay for 60 days up front, and they'll negotiate back and forth, and they'll try to be able to bootstrap their way into paying for less, and they'll go to launch VT and really hope like hell that they win that $30,000 to solve the problem. They'll do all of that stuff, and that's what they should do. They should do multiple approaches in a whole bunch of ways and have a bunch of plan Bs, and they'll piece it all together. That's the way it works in the real world. Okay, let's assume a different and larger business. A 5-year-old business making outdoor apparel for hiking, so we automatically know they're going to sell in the summer, it's going to be seasonal, they're going to have an inventory buildup, and their cash cycle is going to be long because people aren't going to buy hiking apparel so much in the winter. They did this right, and they started out with just online sales. They don't have a bunch of retail accounts. They sell something, they get paid by a credit card, and they get the cash immediately. Mostly online sales. They got it up to $750,000 in revenue last year. It's been growing at steady 20% a year. Friends and family money got them off the ground. They broke even last year, but if they go to the bank's going to say, you need to be profitable. There's a third party that does the picking and the packing and the shipping of the product, and they've got contract manufacturers that are making the product. So essentially, they're a sales and marketing, direct-to-consumer sales and marketing organization. That's the assumptions. They need $250,000 in their mind. They want to hire marketing and customer service reps and some people that can run, campaigns for them. They're going to have to pay some money to acquire some new customers. They're going to have to go out and actually, market to those customers and get them to buy. In order to grow, they're going to need increased inventory because they're going to have to sell $1 million worth of product, or they want to this year compared to $750,000. And to do all this, they also need some new office space, and they got to fit that up. So again, you're going to say, okay, but there's got to be one. Like, go to a venture capital firm. They'll love hiking equipment companies, love them. Just go there and get the $750,000. But this is the real world. So here are very possibly the way this is going to look. They're going to go to alternative lenders and try to piece together some of the capital for certain pieces and parts. They're going to use their current customer list and their brand awareness to try to do some of this through some sort of a crowdfunding campaign. Maybe they can get $100,000 from their customers in some fashion because their customers love them and want them to stay in business. Maybe they get Uncle Harry and Aunt Ida to put in a little more money. Maybe the founder's feeling so good that he or she taps into the home equity that they have in their home and uses that. And maybe they bootstrap a bit by renegotiating the terms, right? And so you can imagine if they pull all of those levers, that 250 could come from a variety of sources. And in some cases, the 250 may shrink to 200, right? So again, that's the real world approaches you would see people taking. Let's do a third and different example. So this is a very different company, much higher growth company. So this is a company that makes enterprise software for the emerging food hub market nationwide. So they're making software. They're selling it as a SaaS or a software as a service product. A 12-month contract, you pay 3 months of it up front and then month to month afterwards. Company's been in business for 3 years. Their annual recurring revenue, so right now they've got customers that on a monthly basis are paying them revenue that would equate to $1.5 million on an annual basis. They think they're going to double this year. That's what SaaS companies do. They all think they're going to double this year. And then in 2019, they're going to double again to $7 million. They haven't made any money yet because guess what? All young SaaS companies do not make any money. We could do a whole seminar on that. They got an experienced team. They've built a company before and been successful at it, a software company. The company's founded by founders and angel investors. They put $750,000 in already. So high growth technology company. What do they need? They think, and they're probably right, that they're going to need another $1 million to $2 million to get to that $7 million level. They're going to build further product modules to add different features and functionality that their customers have been asking for. They're going to hire more marketing and customer-facing and technical employees. They're going to improve the marketing collateral and increase the marketing spend. So this is a lot of what I would call permanent working capital and product development. That's what they've got to do. So again, you're going to be like, hey, this is a simple one. You go to your handy-dandy venture capital firm. They love stuff like this. You'll just get it all. You'll just get it all from them. Maybe. Here's what I would do if I was the owner or founder or management team of this company. First thing I do is mess around with the SaaS contracts. Can you get more payment up front? Can you extend your contracts for a longer period of time? Can you de-risk some of that through some bootstrapping? The second thing is if they're going to build modules, can they get their customer to pay some non-recurring engineering charges to build the modules for them? And then once they've built that module, can they then sell it to others? So can they do those things to take the $2 million they need and make sure it's only $1 million? And then can they go to venture capital, possible strategic investors, other software companies that integrate with their product? Can they go to super angels? Because if you're going to raise $1 million, you don't want to do it in $25,000 increments. You want to do it with people that can raise $250,000. So 3 different companies, 3 different assumptions, 3 different approaches, but all of those approaches are not, here's the one thing you got to do and it'll all work out. All of those approaches in the real world are you got to pull all of these levers at the same time and pivot and figure things out. That's all I got for you. Happy to answer questions.
So what we're going to do is we're going to take questions, but this is being recorded, and you're actually going to be able to see it online.
Wait a minute. We're recording this?
It's a recording.
Oh, shit.
Take back all that stuff you said. And so we're going to actually pass the microphone for questions. You can redact things out.
I can redact? Oh, thank God.
Michael Jack is redacting right now, so.
Right. Can I do a selfie next to the People's Bank? Because I just want to make sure that they...
Should be good.
Is it good? Okay, who's got questions?
Hey there.
Hi.
So you stated early on that any money that is borrowed has to be paid back eventually. What about the Trump approach? I take as much money as I can, and then I'm bankrupt, and that makes me a good businessman. What about that approach?
Well, there's a lot of debate about how much Trump's worth, right? And whether he's really a good business person. I mean, it's you can discharge certain things in bankruptcy, but you also don't end up with what you had before, right? So the reality is, if you're going to keep what you have, you want to keep your home, you're going to have to pay the mortgage payments. It's going to be hard to keep it without it. Same thing's true in a business, but good question.
I'm kind of curious about companies that are being created solely to be acquired, like that concept of there's some very large players that buy companies they're intrigued by, and what that's like from your perspective and how you view those companies and how you view that relationship and how that's changing.
So can you restate the first part of the question, because I'm not sure quite.
Sure. So there are companies that are created with the goal of being acquired, like they're creating technical solutions that they know that Amazon wants or Google wants, or they're building their companies around that concept.
Right.
And how you view those kind of companies and that marketplace and that structure.
Got it. Okay. So if we went back to somewhere here, where would we go? Oh, I know where we'd go. It's the next one. All right. So if the company is not alleviating a problem, pain point or a problem, and they don't have a good solution, they don't have a good management team, then they're not going to be able. So we would look at that as someone who says, "Hey, I'm really building. I know Google's going to need better AI technology." My response to that is, yeah, and they're developing it inside. But if you have a real problem and a real solution and a great management team, you may very well build something that Google wants or some big player wants. That's great. But that's the main thing is this, not who your eventual acquirer is going to be, in my opinion. Because it can end up being very different. Companies get sold to entities they never expected to be sold to because things change. So I don't know if that answers the question, but that's the way I would think about it.
So much is made of the exit, particularly for firms like you who invest and you're looking for the liquidity event. Do you ever look at funds or companies that you want a more longer term relationship with, or is it always an exit, almost like a pre-planned? Because obviously you have investors / customers that want their money back too.
Yeah, so it's typical in the venture capital industry to if you look at percentages of how venture firms will get their money back on the deals that go well, the highest percentage of that is going to be sale of the company to a financial or strategic buyer by far. And the second one might be initial public offering to the extent that you could take the company public. Pretty small fraction. There are occasionally ways where firms design a method where you get to a certain point and then there's a predetermined multiple at which the investor gets out and the other shareholders buy them back. That's hard to execute in practice. Great to think about, hard to actually predict and figure out. The bigger question is what's the time frame, right? And if you look at least speaking from our experience, we got a bunch of companies in our portfolio that have been there for more than 10 years. So I would argue we're pretty patient. If you look at venture capital as a whole nationwide, interestingly enough, the average venture-backed company has been back probably for 7 or 8 years. If it happened in 3 years because everybody wanted it to, would that be better or worse? You could argue that both ways. It might be better in some ways. If if the founders have other things they want to do, they might be interested in selling more quickly, working for a couple of years for the acquirer, and then going to do their next thing. It might be worse in that they may really want to do what they're doing for a period of time. The reality, though, is that any investor, if you're taking in an actual investor and it's a relationship, that relationship is going to last for some period of time until you've gotten them out. And so if you want to operate your business for the next 25 years, in my perspective is it's going to be hard to find one investor to take you through all of that, except maybe Aunt Ida and Uncle Harry, somebody like that. That's the way I'd look at it.
In your opinion, what are the basic pros and cons of crowdfunding and Kickstarters?
I think there's a bunch of pros, right? I think the non-dilutive, so non-equity, non-debt crowdfunding, where you're doing a premium of some sort. You're either pre-selling a product or you're giving them a T-shirt if they give you $100, that kind of thing. The pros are, hey, you're not giving up any equity, you don't have to repay, you just got to perform on the obligation. You're preceding a possible customer base and a bunch of product evangelists. That's great. So there's a lot of pros. The cons, I think, revolve more around can you actually execute and get that product out there, or are you going to be one of those companies that, oops, it misses a milestone and then draws the ire of the community that's supported it. And then the other piece of it would be, do you have already the network contacts to do that marketing? And so I think there's this assumption that, if I list what I'm doing on Kickstarter, I'm going to get all the money I need, and I don't know what the percentage is. Louisa, do you know what the percentage of successful Kickstarter campaign? It's a relatively small percentage, right? So a lot of them just don't meet their minimum and they fail. So I think you have to start Kickstarter, Indiegogo, or any of those things with a marketing plan and a list of people that you can reach out to. And what I've also heard is you would start with at least one Uncle Harry or Aunt Ida who's going to put in enough money to kind of get you to the minimum threshold right there so that on day 2 or day 3 it looks like you have momentum. So I think there's a bunch of tricks. I know there are people that give seminars on how to game that. But I think properly used, it's a great tool. Non-dilutive capital that helps you figure out how to get to the next step. I think it's great.
I heard you say, getting the amount of money right that you need. I've also heard to try to get more than you think you need because of the difficulty sometimes in getting the capital, and then for kind of like the oops that you talked about where the customers, doesn't go to plan, they want green, not orange. Mm-hmm. What's your thought on kind of having a buffer, so to speak?
Yeah, I still fall out personally on the right size rather than, hey, the money's coming easily, I'll borrow more or I will get more from investors than I need. Because why do you want to sell more of your company? So if you had a high demand from investors for the $2 million of capital, rather than raising $3 million, you might be better to say the demand's so good I should raise at a higher price, so I'm giving up less for the $2 million, right? That's kind of the way I would look at it. And from a borrowing point of view, for sure, it's like I need a pickup truck. I don't need to borrow and buy 3 pickup trucks because I really only need 1. So I'm a firm believer right sizing is better in the long run. There are people that would vehemently disagree. Take the money when you can get it, take as much as you can. You know, it's an imperfect world. We can't all agree.
Hey, in your example 3, you mentioned the opportunity for software as a service firms or software development companies to potentially partner with other companies, whether that's through an API or using other existing partnership strategies, building that into your software development build-out strategy. Now, some of the VCs and investors that I've talked to say that's a major red flag to not build all of this technology in-house. So can you talk about using APIs or using other partnership strategies and how that affects the valuation of a startup company?
Yeah, again, I think there's a bunch of different opinions on that, so I think it go a lot of different ways. In a perfect world, you can make money on the fact that you can use some open source related stuff and figure out some ways to add to that, do it better, do it more quickly, get to market more quickly, and therefore your execution is better, faster, cheaper, whatever it might be, than the competition, and you're doing it for less money because you're not developing something that's right off the rack. I tend to subscribe to that theory. There's certainly other people who are saying it should be more proprietary, you should have everything in-house, you should control the source code, The problem with that, I think, in the long run is if you're not the actual complete winner in the space, then you've built something that's non-interoperable or integratable or however you want to think about it. I think you're worth less if you can actually even survive during that time period. So.
Great. Probably have time for about 1 or 2 more.
Hi.
Hi, Marie.
So I watch a lot of Shark Tank, as we probably all do. And of course, they take your equity in the Shark Tank world, which is okay, a lot of equity deals do. But they also give you their help in growing your company. And so how do you, normal people, working the angles that you listed here, evaluate when an investor or a shark of a sorts who takes your equity is going to give you some help, and is that a common thing for you to expect?
I'm really glad you asked that question because I didn't address any of that at all. So ideally, in an investment scenario, you don't want somebody that just writes you a check, I think. Now, I've talked to a lot of entrepreneurs who say, I'm just looking for somebody to write me a check and stay out of my way. I would submit in the long run, you're better off to find someone who can write you a check and actually help you in some fashion, whether that's figure out your market, whether that's keep track of your numbers better, whether it's help you find the next capital you're going to need. Angel investors can do that, right? I mean, not all of them do. Venture firms can do that. Not all of them might do that. But because it's a relationship, not a transaction, I think it's incumbent on the entrepreneur to understand that value and feel that if they're giving up a piece of their company, they're not just giving it up in return for money, they're giving it up in return for someone who's going to actually help them achieve their goals and not just be a thorn in their side. There's a lot of investors in the world who think that helping means we're going to have a board meeting and you're going to report to me. That isn't what you're looking for, right? You're looking for someone that can actually help you. Yeah, you're going to need to report something to them. Sure, you have their money, you should, but that's not a relationship. A relationship is not, that's a parental relationship. That's not what you want. You want something that's more, I don't know, sibling, to torture the metaphor.
One last question right over here.
Kind of along those lines, if
Hey.
how's it going? Thanks for
Good.
the presentation.
Yeah.
If you are an employee that's joining a new company,
Oh, where is this question coming from?
right, and and let's say that there's equity on the table as an employee for your sweat and labor to build the company. Would you? It's kind of more specific to the equity part. Would you recommend it's best to take equity, or is a deferred compensation, maybe like an annuity, a better way to go about it? Or is equity kind of equity, and you'd rather end up with that at the end of the day?
So this is above my pay grade, but there are some lawyers here. From my perspective, I think I'm a believer that all employees should have some equity share. So I'm a believer that in a perfect world, we would have companies in which the employees not only were working for a wage, they also had something that was theirs. It's an imperfect world, so that doesn't always happen. But I like that because at least it allows for, if there is a terminal transaction, it allows everybody to be paid in some form or another. So I kind of like that more than deferred comp or some other, phantom stock or, a bunch of things that are constructed in a whole bunch of ways. I kind of like, okay, you're worth X number of shares on top of what we pay. That's my personal opinion, but I don't understand how to structure those things and literally, we've actually talked about this before. So you want a lawyer that can help you, that can kind of help you figure that out, for sure. And that ends the paid announcement for our lawyers in the audience.
So Cairn, I want to thank you. This was absolutely fantastic. Amazing. So we have a second half to our engagement tonight, which is, as you know, we've had a speaker series with fantastic speakers like Cairn and Michael Jagger and Justin McCabe and other people like that. But we've also had a cohort of 4 entrepreneurs who started this whole program by presenting their product prototype, and they've been working for 3 months to refine their business model, their prototypes, working on their launch of their business under the tutelage of John Antonucci from Launch VT. And so what I'd like to do now is actually turn this over to John and have him introduce our cohort, and they're going to talk a little bit about their process and where they're at now.
Hey everyone, thanks for sticking around to see the cohort. These are, I am a parent in real life, but I also have been living vicariously the entrepreneurial dream by working with a cohort of makers in this year's inaugural Jumpstart program. So I'm very proud that we've gotten to this night. I'm sad to see them go. I've already kind of got plans in the works for like some kind of summer reunion. Probably gonna like stalk them at the farmer's market or something like that. But I just wanted to say a few things in addition to what Cairn had said at the beginning. One is that there are resources here in this community for you for whatever you need. You have to work a little, but we've made it a little bit easier for you to find them at Launch VT. And so of all the alternative lending sources and the crowdfunding sources and angel groups and venture capital funds, they all exist along with all the other organizations that support entrepreneurs in the state of Vermont on an interactive directory on our website. So if you go to launchvt.com and go to the connector, you can search for, you can filter by funding, and all the lenders will come up. And you can check out and contact them and find out the ones that are right for you. So those resources exist. Also, as Cairn mentioned a few times, we do run a annual pitch competition where we do award cash prizes. Applications have closed for that, and that cohort starts up now. But please do subscribe to our newsletter and follow us along and come to the event, because last year we had an impromptu pitch competition and we crowdfunded from the audience, like funded from a literal crowd, $100, and an entrepreneur walked away with that money. So that was really great, and you can just kind of get a feel for it, and it's a great opportunity to network and make those important connections that so many entrepreneurs need when they start. Just those introductions, hello, how are you, and be ready to have your pitch out there. We also provide a few other resources, so please check out our website when you get a chance. But I mostly just wanted to say that it has been an absolute pleasure to join forces with the Generator. This community is incredible. It's been so great to get to know everyone here. I am so inspired by all of your products and all your work, and I'm very proud about the progress that our cohort has made. And so I'm now going to turn the mic over to them and let them come up and tell you about their products, their businesses, and what they've got planned. And please stick around afterwards so you can see their beautiful work. Their products are truly amazing. They're very talented people. And they also have business summaries, executive summaries, so you could take one or look at those to see what they're doing. So first up, I think we'll have Courtney. And I'm going to let her introduce her business and everything else.
No, I just have notes. Okay. Yeah. What? No, I don't. No, I just have notes. So, hi, I'm Courtney Record, and I want to start by just thanking Generator for this fantastic opportunity and all of the presenters, because I feel like I've learned so much in different areas, coming from being a creative person and not having a business background at all. I just am learning so much, so it's been really a great experience for me. So I create topographical jewelry based on the data from the U.S. Geological Survey. And this is a project I started just over a year ago. And it's a unique process. I came up with the idea one day while sitting in study hall, because I'm a teacher. And it took me quite a bit of time to refine the process and actually have products. But now I have products, and so you can check them out at some point later. This program has been essential to me, as I said, and I would say a couple of my big milestones are looking more closely at my finances and really forcing myself after the presentation with Davis and Hodgkin. I really sat down and looked more closely at my finances, and obviously had to do that, on a regular basis to order materials and to keep track of my books. But that was one of the areas that I feel like I was avoiding a little bit, and so I've had the support of the cohort and John and the accountants who came in to really take a closer look at that, and knowing that that is such an important part of the business. So that was a huge milestone for me. It was not just the physical act of doing that, but the mental hurdle of actually being okay with looking at it and looking at the realities, which actually were much better than I thought they were going to be. So that's great. And let's see. We had an opportunity to meet with Matt and Eric of M&E Designs, who they mentioned earlier in the presentation. And they are really good at talking about sort of from making a product to getting it distributed. And so they connected me with MSI, which is a distributor in, I think it's Moortown, Vermont. I'm probably wrong about that, or Morristown, I think. Anyway, I didn't even think that that was a possibility. So the fact that they said, oh, this is an idea for you, if you are getting to the point where your orders are getting really large and you're not able to fulfill them, you could have the casting company send stuff to them, and then they could actually fulfill your orders, except for your custom orders. So that, making that link and knowing that that is a step in the direction of getting more wholesale orders and going a little larger scale was really, really helpful for me as well. And so the two other things, my other two big milestones were, I mentioned I'm a teacher, and during February break, which has fallen during this time period, I got to actually visit. I went to Southern California, and I visited some of the places that I've made custom work for. So I had a piece that I've made a couple of pieces of Titus Canyon, which is in Death Valley. And so we took a trip, and we went to Death Valley, and I got to visit Titus Canyon, which was amazing. So that was super exciting, because other people were excited about Titus Canyon, which was why they contacted me. But to then see it in real life after making the pieces that I had made for people was really super cool. And then just connecting with other entrepreneurs and being in a cohort of people is always really supportive, because you get to talk about what's real and your struggles and the things that you're just concerned about and thinking about, and all of those things that you're not necessarily going to share with people who just aren't going through the same thing as you are. My two biggest needs at this point are financing. I have almost paid off my first small business loan, which feels like a huge accomplishment to me. And so I'm at the point now where I'm sort of ready. After hearing Cairn's talk, it's a little frightening to think about taking like larger loans and things like that. But I feel like I'm ready to take the leap, because after looking at my numbers and taking a harder look at that, I feel like I can be successful with paying off larger loans. And connections, so connecting with the right people in the right places. One of the things I've learned in terms of creating accounts, wholesale accounts, is that it can be difficult to talk to the right person. So, for instance, it took me quite a while to get in touch with the right person at Stowe Mountain Lodge. And I knew that if I could get in touch with the right person and make pieces that are of Mount Mansfield, and people that go skiing there, that's their mountain, they love it. Taking a little representation of Mount Mansfield home was really great for them. But it took me a while to get to the right person. And sometimes those people they're kind of walled off by other people who don't want you to get to talk to them. So if anyone in here knows someone, at one of the big ski resorts in the area or something like that, I would love to get a name. And my next steps are that I'm working on a set of national parks pieces that I'm going to submit to Xanterra, which is the concessionaire for some of the main national parks, and I think eight of the 10 biggest national parks. And so I'm creating a selection of pieces to submit to them, so hopefully I will be at those parks at some point in the future. So that's a big thing. And then I'm also in conversation with a catalog called Uncommon Goods, which you might have heard of. So I'm considering working with them, which would really increase my national exposure. And then I have also just joined a collective, which is opening in Burlington, which is called 30 Odd Artists, and it's opening in May. So that's a little closer to home, but I'm also excited about that. So thank you.
All right. You got slides, Sue. You can go last. Christine Hill.
Hi. My notes are on my phone. I'm Christine. My company is Tender Warrior Company. Just renamed it. I make jewelry and other things out of recycled material, largely bike parts and silverware and coins, and I experiment, but those are my main things right now. And I donate as much of the revenue as I can to causes related to the material. So I got started playing with bicycle spokes, turning those into bracelets, and then donating money back to what was Bike Recycle Vermont, which is now Old Spokes Home. Brian, thanks for wearing the t-shirt. I just want to do that with the other products that I've started making out of different materials. So the idea is that I make, silverware, earrings, and rings, and I could support the Intervale. And I make coin jewelry, and I can support some sort of like micro grant organization. So it's sort of poetic, But the idea is to develop a business where you feel really good about what's happening at every single stage of the product, from production to what the revenue is doing. So this program's been pretty amazing. All the speakers have been amazing. John's been amazing. Chris has been amazing. It's been really great being part of a cohort. To echo Courtney's sentiments, to every 2 weeks join up with 3 other people who are kind of going through the same thing, who have similar questions, has been really, really helpful. For me personally, I've had a few breakthroughs. I'd say the first one was meeting with M&E Designs, who are a sponsor of Jumpstart. Matt and Eric are production wizards and prototyping wizards, and I laid out all of my jigs and tools, which were custom made by the late Timothy Granis, who some people probably know. And I was told that they would make me a robot that I could drop a spoke into and it would spit out a perfect bracelet. And so I was totally anticipating them kind of running me through those motions, and they were just like, no, this is great, you're good. And I was like, no, but they're like, no, if you got an order for 20,000 bracelets tomorrow, we would just help you remake this exact system 10 times over so you could hire people to make them. And I was like, oh. They're like, yeah, you need to focus on all the other stuff. And so just having experts tell me that just freed up, my mind so I could focus on other things and know that if I did need to up production, that would be the route I would take. So that was pretty amazing. And they also told me about a lot of other things. They told Courtney options that I could consider if my business went in different directions. I also took so many classes for free, which was part of the program, and I was feeling weird about it, but Chris was like, no, do it. You take those classes for free. And so I took a laser cutting class and made a little POP, point of purchase display, which is not finished and it will fall apart if you pick it up, but that's fine. And I took a metal training class and a wood shop class and a jewelry class because I'm self-taught. I've never used a torch or anything. And so obviously every single time I took one of these classes, my mind just expanded so much. And I've always thought that you can't heat silverware because it's silver plated and the different metals melt at different temperatures. And so in the first 10 minutes of my class, my instructor was like, no, you can totally do that. And I was just I've had the wrong information for years. And so there was all sorts of breakthroughs in that. And it was probably the second or third class that I took where I decided I was going to move my studio here, which I'm now doing. Just because there's so much going on here. It's so exciting. And then another breakthrough was, all the meetings I had, but specifically with Michael Metz and Jules Polk, who's not here, but both who offer so much knowledge. And it was specifically in reference to my giving structure and sort of how I would donate revenue and how I do that in a way that didn't sink my business, but also worked for organizations and how to first focus on Vermont and then maybe scale up. So that was really helpful. They offered a lot of expertise and it was just a phenomenal example of what a great community generator is, where I sort of told, I don't know if it was Chris or who hooked me up with who, but I was like, this is the thing I need to work on. They're like, I've got the person for you. So it's been really cool. Right now, my needs are material. My biggest issue, and Matt and Eric at M&E Designs pointed this out, is sourcing. If you're going to rely on recycled material, you have to make sure you have it. So I'm currently working on setting up a incentive program, but if people are out thrift shopping and they see a bunch of plated silver or they see a bunch of coins, letting me know, or is always great. I'm working with the bike shops. Luckily, I'm pretty connected there. And otherwise, I just need help getting my product out there. So like Courtney was saying, connecting with the right people is always super difficult, with the shop owner, not the employee, or with the buyer and not the shop owner. So if people see my wares and they can see them being in a store and they know the person I would need to talk to, just letting me know would be great. Next, I have to move my studio here, which is going to be an undertaking because I've been in the same space for 5 years now. And I also want to develop a really robust wholesale program, which I've never done before. I've only gone to the farmers market downtown, and made sort of one-off sales here and there. But I like to ride my bike on the weekends, so I'm not really trying to do the markets as much. So yeah, that's why I'm going to build wholesale and go to trade shows. So yeah, ultimately my goal is to build a business that supports me, but also that builds a lot of awareness and hopefully a fair bit of capital for organizations that are doing really, really good work in this community and in other communities, hopefully eventually when I grow it. So thank you.
All right, Jake, it's your turn. He's hiding. All right, Jake Blend.
Hi. My name is Jake Blend, and amongst the many, many fun things I do, I build these small arcade machines. You know, biggest problem really, and I've worked in the arcade industry for like 4 years, which you will not hear anyone else in the state say, because there's like one arcade right now. I used to say, oh, it's cool, like they only hired me because I can like fit inside of one to fix it, right? And now I guess I'm putting myself out of business by making small ones. But the biggest, you know, trouble with having an arcade or wanting an arcade is the cost, the size, moving it around is horrible. And then you're stuck with one game if you buy one big machine. So what I wanted, and I found out a lot of other people wanted, was a small arcade that gives you that nostalgic feel, but could fit in a backpack or on your office desk, put on your headphones, you can go in stealth mode. I also have a slightly larger one that would be perfect for like a break room. I'm gonna hit all these check marks, you know. Milestones. I think one of the earliest breakthroughs that made me rethink this whole thing was a meeting at M&E Designs and talking about scaling this product. So in terms of like me doing all these different things and kind of running around one at a time, like they made me think, oh, what if you wanted to do 100 or 1,000? What would it look like? And being able to like hire people became a reality, you know? So that was pretty exciting and made me kind of cautious, kind of test the waters, and then I feel like I need to just like penguin plunge it and just run right in full speed at this point, because I think the biggest accomplishment for myself during all this was just gaining the courage to do all this, to put myself out there. And there's so much encouragement and so much support with this program, and an extension of generators like that, but this program specifically targeted for people that want to start a business with a cool product. So much support. I didn't have one moment where I didn't think I was supported, you know? And it's just really nice to feel that way. Other milestones, slow but steady sales. I wrote that down. Upcoming projects. Oh, because of this, I now am thankful enough to be able to divert jobs to other generator members and other people I know that can do them. I'm approached often to find fun ways to make machines and computers, anything really, interactable or fun. Gamify this, Jake. Gamify that, Jake. I'm like, all right, like that's my job now. Full-time, more than full-time, and it's exciting. So some of the installations coming up, one is going to be at the airport, one's going to be at the Smithsonian later this summer, which is just like huge for me. Bottlenecks. You'll hear it many times on anybody's tour, especially the Michael Metz Whirlwind Tour. Laser, most popular machine here, especially during Christmas hours, anytime. I've been a part of making the rule where you only get to use it 3 hours a day per person. So I can't really do as much as I'd like, especially because I'm like pretty much in charge of it. I can't just hog it. So I get to hopefully be one of those members that says, hey, I just need my own laser cutter. Some of the other restrictions are space. Even though I'm making smaller arcades, I can't make them much smaller. They won't fit a joystick. So to be able to paint them somewhere and do some of the VOC, more dangerous things, and also be able to have enough room to make more than one at a time. Those are my goals coming up and some of my biggest needs. What's up for this summer? Pop-up arcades. I'm looking at maybe integrating with Arts Riot and the truck stop there, and pretty much just roll up a truck and put down the sides. There's an arcade. It just becomes an attraction, and there's a lot of demand. So I'm trying to meet that by finding a space close, cement floor, and just devoting my time there and here and freeing myself up so I can help other people, which is really great. I mean, I do that all the time now, but I'm spread thin with all this attention. I just wanted to say thanks to so many people. If you're not explicitly listed here, know that you are thanked. Generator, all their members, all their staff, especially Chris Thompson, for putting this together. Yay! We're going to be here all night if we clap for everybody. Save your applause till the very end. For real, the cohorts, awesome. It's so cool to go through this with other people that are in the same boat and feeling the same way and maybe nervous about taking that plunge. And then I think maybe that was the best thing about it, was just going through it with other people. But Chris Thompson, cohorts. John. No one's clapping for John? Just kidding. I said don't clap. I'm a jerk. No, and they put together this program, which is amazing. I've been waiting for this forever. I had the application ready when it was first conceived of years ago, and now it's real, and now it's over. Wah. I have so many people to thank. Mandy, my girlfriend, and comptroller. She's in charge of all the money. Yay! Cairn and FreshTracks Capital, who first actually loved this mini arcade idea at a road pitch challenge in Shelburne. Long story short, I was scuba diving and filming the robot drones, and I jumped up, and like James Bond, I changed into a suit in one of the porta potties, jumped up on stage and did this pitch, and I got it. So thank you, Cairn. Yeah, I don't know, anyone that's played a game in town, thank you. Thank you for everyone that is here. Thanks to all the graduates. I see Rob Rock in the back, M&E Design, all these people that are super inspirational, Pinbox 3000, Ben and Pete. Everybody here, I think I know just about everyone. If I don't know you, come introduce yourself to me and let's hang out. Let's talk about cool stuff. I'd like to divert my time to questions. I'm just kidding. I'll be here for questions. I thought there was someone. Oh, and I just wanted to thank the viewers at home. We're not live? Well, when you're watching this, thank you so much for watching. Next. All right.
All right, last but not least, Clay.
I'm the high maintenance one, clearly. It's important. There we go. Pictures speak 1,000 words, right? There we go. Picture of me. So yeah, I guess everyone kind of talked a little bit about their jumping off period, and Jake had his application done before it came out. Full disclosure, I did mine on the night it was due because I found out that it was due that day when someone stopped by Space Gallery where my studio was beforehand. And this has just been such an incredible process for me because this started as an art project for me that I wanted to do. And then people believed in me, and someone bought a piece, and then I sold 3 pieces, and then this Jumpstart program came along, and I was like, maybe this is a business. I don't know. And so I applied to it, and when I got in, it was like this moment of realization for me. Basically, that just kind of like has changed my life really in terms of my focus and what I'm doing. I make lights. I'm a lighting designer, and I used to work in commercial architectural stuff, and wanted to combine driftwood and found wood with LED technology. Every type of lighting is going to be LED one day, I swear by it. Even those cool restaurants that have cool filament bulbs, they'll be LED. And so I just saw this opportunity as a way to kind of approach LED technology and bring nature into kind of interior spaces. This is an example of some of the work that I do, trying to use organic shapes and LED technology in a combination to kind of make it work and make you question where the light source is and what needs to be a light source. When I first came to Jumpstart and started the whole generator program, I actually almost cried the first time I used the bandsaw at the workshop, because I had been doing this for 4 months, kind of as artist in a tiny workshop, sawing away, and like just realizing what you need to create something is half the battle. Your tools. I spend half my life in Lowe's and Home Depot. I'm sure all of you can attest to that. Finding the right screw, finding the right tool, and coming here has just opened that opportunity. It's cut the amount of time I spend, creating these pieces in half, so I can make more of them. And I guess it is at the end of the day all about efficiency. Creating more, creating different types of what you've already done, but that was a huge milestone for me. The second one I'd say probably that ran parallel to this whole experience for me was a show that I had that opened on March 8th actually at Maglianero Cafe. You may know the Karma Birdhouse Gallery. And that was such an incredible thing for me because it ran, like I said, parallel to this whole process. I found out that I could do the show basically the same week that I did that, and I was like, oh, this stuff is happening a lot. But it was amazing because it was kind of the launching of this whole collection that I wanted to show, and along the way, the branding exercises, the financing side, which is just like, I went to art school, Need I say more, But like, it was just absolutely eye-opening for me, and actually realizing that this stuff can be fun or interesting when you can apply it to your own business and what you love to do, and making that a reality, that's awesome. And having that at our fingertips. A couple people said, I hired a lawyer to figure out some accounting, and I learned more in one lecture than I did in 6 months. And like, it just goes to show how much information we had at our fingertips this whole time, which was so cool. Right now, what I'm trying to do with my business is that kind of impalpable side of connections and meeting people and finding a home for these places. Where does it fit? I've had the opportunity to install a few of them in people's homes, and people have bought them and put them in hotels and things like that. And right now it's finding like what the future looks like, which we've had a lot of discussions about, actually thinking about scaling up. Like, what does that even look like for you as a entrepreneur? If you were to sell 30 of them, where would you want them to be? So it's really those connections and people that I'm talking to, and any conversation I realize, especially in Burlington, being so small. I'm from Boston, a little bigger, but everyone knows one another, and there's such an amazing community here that I've just been like, everyone you talk to could be a potential person that could help you out with your business. At my show, my friend was starting her catering business, and so she came and bartended the event and got tons of clients out of it. And that's what I love about events like this and with the cohort, is that like we're all helping each other so much. Obviously the marketing, which is just like, feels like you can just be sucked into your computer forever and ever. Looks great at the end, but so much of it is like really understanding what you want to get across, your brand, your image, what you want to communicate to people. And, you know, it's supposed to be fun, and it's supposed to be this kind of experience you have with your own brand, you know, your own company, how you view it. So that's been also another really amazing thing. And I guess the future is, like I said, it's unknown. The connections that I want to make, the places I want to be. You know, I'm a lighting designer. If anyone else here needs lighting, or I can help you in some way, that's what I'm here to do, is create a business that works and fits seamlessly into our community. Thank you.
One final story about the cohort. So you have to be careful. You want your cohort to like listen to the advice and do what you ask them to do, but the whole time I was just telling them to sell. I was like, get out there and sell. Like, call people, walk in the door. Damn it, tell them, you know, what you're worth in the paper. Like, get what you're worth. Like, trying to pump them up. And I show up last session, or the session before last session, and Clay hands me a card, invites me to his art show, which is at the same time as one of the Jumpstart sessions. And so I was like, Clay, man, what are you doing? You're supposed to be at all the sessions. And so he instead had an art show and sold 7 of his pieces. So he was doing exactly what we asked him to do. So please stick around, network with these guys. If you've got anything that you can help them with, please do. Feel free to talk amongst yourselves, hang out, and thank you all for coming and be a part of this awesome series.